following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com and the ever-expanding, ever-enjoyable, ever-informative Options Insider Radio Network. And I am back, listeners, and you can't tell because this is an audio program, but I am tanned and well-rested from a nice little jaunt to the West Coast, and I'm ready. I'm back in the saddle for some more Option Block hosting. And joining me today on the Option Block All-Star panel, I have a returning cast of characters, starting off with the man with the jauntiest cap of us all. He is none other than the Viceroy holding down the educational chair over there at Options Express. He is, of course, Alex Jacobson. Alex, welcome back to the show, sir.
Hey, Mark, welcome home. And the word of the day here at Options Express is jumbo option, ironically. There's a working group meeting right now starting to discuss the Spider Jumbo, which SEC has put back a little bit, but it's an interesting concept, and we should talk more about it as we progress today.
Minis, jumbos, we're going crazy here in the options market with all these different size contracts. People have a hard time keeping up with this stuff as it is, and now we're throwing all kinds of different durations and sizes into the mix. So this is just a recipe for retail confusion. Luckily, there's a show like this to help clarify the issues for our listeners. And speaking of clarity, doesn't get much clearer than when we bring down the man from the mountains to put on his smoking jacket and dispense some options, wit, and wisdom. Of course, I'm speaking of none other than good old Uncle Mike Tusaw from RCM. Uncle Mike, welcome back to the show, sir.
Always good to be here, and I must say, Mark, you look really tan.
It's amazing how that looks on this audio show, huh? But yes, tanned and rested and ready to go. We'll have to add a video component for our listeners.
I'm envisioning it, so I'm sure you are.
I know you spend a lot of your free time envisioning me in various scenarios, so enjoy that, sir. I'm sure our listeners will. All right. And joining Uncle Mike and Alex and myself on the All-Star panel, we also have beaming in from the great state of Maine, where lobster is indeed plentiful and succulent. We have none other than Mr. Andrew Giovinazzi from Option Pit. Andrew, welcome back to the show, sir.
It is a joy to be here. It is a joy for the Option Lobster to swoop in and talk to my homies spread about the country.
The homies from the great state of Maine eating lobster. I love how you always sound surprised whenever I toss it to you on this show. It's great. It's like, what are you doing?
You know what? After living in San Francisco and Chicago, for most of my life. Maine is still a bit of a surprise for me.
New
Actually,
surprise every
my
day.
wife got a clamming license today. You should have heard. That was an ordeal.
Wow.
But that's another story.
A clamming license. You are indeed living the life, sir. We are all envious.
Well, it's not like we're going to get a lot of clams. I just don't want to get dinged by the clam police.
The clam police.
Kid and I want to go out and grab 20 clams.
The problems in Maine, the clam police. Before we turn this into the clam block, let's just keep on rolling and kick off the show with the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we detail what we were watching, what was going on in the old markets, what caught our eye. And indeed, it was difficult for me to see much of anything because I typically use a lot of different tools, including one LiveVol Pro to set up for the show and track a lot of my trades. And they made a lot of major updates apparently today, which seemed to take their tools offline for most of the day. Andrew, did you have the same problem? Could you not log in as well for most of the day?
I wasn't using LiveVol X. I was just using Pro. I didn't have any problems that I could see. Oh, you have to. They got a new. Did you just get back to your?
Yeah, I just got back after a week off, so maybe they did it last week, and I'm just catching up.
Yeah. I got to do Control-5 to get the stuff updated. But yeah, there's a lot of really good stuff in there.
Yeah, I haven't had a chance to
really
play with
good
it
stuff.
yet, but I'm excited. They have covered call screeners and everything else. Not to turn this into the LiveVol block, but we do use them a lot here on the show, and I like those guys and what they have to offer. But yeah, today a little bit difficult, but I finally got it working right before the show here, so we can run down some fun stuff with you, the listeners. And of course, after a bit of a sketchy week, of course, because I was on vacation. That's why the markets were a little scared. But now I'm back, everything is settled, and we can rally again. And we were up about 0.5% on most of the major indices. Dow, a bit of a laggard, up about 0.3% to 14,613 on the day. Of course, the VIX commensurately turning to the dark side, closing today, the VIX cash down at 13.19. And I won't even mention the percentage that it decreased because I know that just incenses Andrew to no end.
Yes, it actually, in its sense, is Mark more, but we've tried this and you keep scolding me. You guys keep that old saw, but it really does, The VIX is down 8%. Oh my God, what a silly thing that is to say.
It's kind of one of those usage things now. You kind of have to just roll with it. It's everywhere. CNBC, every major print publication. Unfortunately, you can't put that genie back in the bottle. It's a lovely
Times
genie.
are changing.
Yes, indeed. But there was some interesting news going on today. Well, first, before we do that, let's hit on some of the stuff you saw last week, Andrew, particularly toward the end of last week. Of course, we had a very tumultuous couple of days. I had to step out from the Panda Pen out in San Diego to put on some trades. Things were moving so quickly. Anything catch your eye in last week's VIX that really, either VIX cash movement or the futures or some of the options trading that really caught your eye and you wanted to mention here on the show today?
What surprised me was we kind of shook off the whole non-farm payroll thing. Like jobs, we don't need them. So VIX, we actually had a little back spread going into the VIX, and watching it, and it actually it's done well. So it's surprisingly, it's like your juice for free, the kind of trades, I just love them. Can't get away from them. And it actually is traded nicely. So no complaints there. Watching the VIX, watching, the skew, I think it's trading close to lows for 2013 in the big indexes. If you follow like the SIBO skew index and just looking at, so it feels like the little sell-off we had, everybody just blew out all the puts they had, and now they're watching. And today they're just letting the volatility collapse. So now's
the time to get back in for some downside, you're saying then. Cheap bargain prices.
Actually, I was selling some VIX puts, and I'm buying a ratio put spread in the SPY.
There you go.
So it's just really, really strange. Like the market, it's like the financials came back today. Not quite sure what changed. Maybe let some of these banks in Europe finally fall apart and rationalizing these things in a more market-oriented way. I don't know, but I found this rally today surprisingly strong, and the destruction of the VIX feels like it's overbaked. We haven't had one earnings come out yet. Not one anything. And they're already killing the vol before earnings. Usually about half, I'm going to say about maybe 25% through the cycle, they start to kill it. But, already on a Monday, I find that interesting.
Speaking of the lack of earnings, it is indeed that time of year again. It seems like we just did this dance a little while ago. We're already back into the teeth of it. Of course, Alcoa reporting right now as we're recording the show. Listeners, Alcoa, traditionally the kickoff to earnings season. Alcoa closing today at $8.39, up nearly 2% or 15 cents on the day today. And looking at here on the April 8 straddle here with a few weeks to go, trading about, looks like they got about 20 cents worth of juice in this thing. Not exactly the highest vol name or the most scintillating name from an options perspective, but Alcoa very much a bellwether of how, the scene, people like to look at it, see how the season's going to go. We're waiting right now. It doesn't look like they've announced yet. They're off a little bit in the after hours. I don't think that's pretty much just noise. Waiting for the actual announcement, but we will keep you informed, listeners, with some live updates as that number comes out to kick off earnings season proper here. Speaking of kicking off and just in general tracking some of the names we love, you probably had a pretty busy week last week, Uncle Mike, I could imagine, with Apple moving around a wee little bit, some activity in the metals, and of course, good old Ford having a bit of a hiccup last week and popping. Maybe we'll start there. You've been talking about Ford a lot lately. Did that dip down to the mid 12 handle range? Did that entice you to do anything else? Are you writing 12 puts again? Are you trading 13 handle? What are you up to in Ford?
Still watching it. I was considering getting into the 12 puts today, but I wasn't going to do it on Friday, but I was considering doing it today. But I'd rather wait till tomorrow and miss it than get in on a day like today and then have it be at 12:20 tomorrow. So still being patient on Ford at this point in time.
Ford was indeed the one I had to literally step out of the Panda line to trade last week. It was moving so aggressively. So it called me away from the Pandas in the San Diego Zoo, but it was worthwhile, I think. But yeah, a lot of activity going on in Ford. I know you were short the Marches. Those are now, you haven't re-upped on the 12 handle then. You're still waiting, apparently.
Yeah, that's the one I was short, and that's one I've been playing. But I want to wait a little bit more on it. Just the earnings season and us being at these levels in the macro market, or whatever you want to call it, are concerning to me. So I want to see a little bit more of a base, so to speak, in the 12 level before I start selling those puts.
You know, it's funny. I've been short a ton of Ford for a while. I don't trade much underlying, but I have been out there. And I've been trying to give it back. I've been shorting those for 13 puts for a while now. And it won't take my stock back from me. I keep trying, but they won't take it. So I say la vie. Not a bad problem to have. I'll keep doing that dance over and over again if they make me. But I've been trying to take that off the table for a while now. And Ford, for whatever reason, refusing to take it back from me. So interesting stuff. Don't trade much underlying. Don't talk about much underlying here on the show, but Ford, always a fun one, and actually having a little bit of life to it of late, so making it a fun options name as well. Speaking of a fun options name, Facebook been kind of dancing all over the spectrum of late. Wasn't too long ago on this show we were talking about, is it safe to write the 19 and the 18 puts? That seemed like a big concern at the time. Of course, it retraced up to the upside into the mid to low 30s. Now it's trading back in the mid 20 handle again. Closing today, $26.85. Down about half a buck on the day, or 2%. And the market seems to be giving back some of the love it gave it for, I'm not sure if you guys have been following this Facebook home thing, but there's been rumors for years that Facebook's going to launch a phone. Never really made much sense to me. Why would they get into the hardware business? This seems to be the closest attempt they've made to doing that. It seems to make sense for them. Their software guys make software that goes right on your phone, so you pretty much take over the phone. So your phone is essentially a Facebook phone. They get all the benefits of having the hardware without having to deal with making hardware. So that's interesting.
But look at Google, though. I mean, Google's down $70 from the highs.
Yeah.
With the market still close to its highs, and what's going wrong with Google all of a sudden?
Well, I think that Facebook Home kind of thing is a clear threat to Google on the Android side, because Android is kind of the reason they got into that side of the business. It's a free OS. It allows them to really expand the reach of their products and services and the ads they deliver through those products and services. If now someone is instead essentially turning their Android phone into a Facebook phone, that's going to strip away a lot of that value for them. It's going to be really hard to do on the iOS side because Apple locks that down so much. It's going to be interesting to see if they let Facebook do this or if they mitigate it somewhere. But Android is open, so Android is clearly the target for this, which is probably why this stock's getting clipped right now.
Yeah, it's like 10% of the market value, just boom from the top. Sorry, Alex, go ahead.
No, Andrew's right. It was clear last week that the Facebook news seemed to impact Google more than it impacted Facebook.
Totally. Yeah, I was shocked.
Has your Idea Hub been spitting out anything interesting in the FB or the Goog range lately, Alex? All this juice going in both of them?
So Goog is one of the targets, and yeah, there have been lots of Google ideas simply because there's been a little vol pop. Facebook isn't part of the population in premium harvesting because there's no volumetric broadcast on it, but that's one of the things we're looking at changing, is either creating our own volumetric using some of the established methodology and expanding the population. But right now, Goog's there, and it's there, every day, and it's literally probably the second most showcase name after Apple in premium harvesting. But Facebook's not on the radar yet, but it's in the docks for planning.
That's true. I forgot you need another volatility variable, if you will, before you can really kick them into the Idea Hub. You can't just pull the front month or 2 month out straddle or anything like that.
Yeah, it's trade secret here. It's one of the things we're talking about to expand the population of stocks, and that's one of the complaints we get from people is, how come the only 5 equities I see are, Apple, Amazon, IBM, Google, and Goldman Sachs? And in terms of equities, those are the 5 that the SIBO broadcasts a volumetric on. And I actually have a concern that at some point, if SIBO doesn't monetize those, that there's no reason for them to continue broadcasting them. As with VIX, they broadcasted for a long time before they monetized it. And, they're a for-profit exchange, a public company in a for-profit exchange. I've had conversations with their development people about, who has the appetite for single stock vol, and we've talked about it a lot. And I'm not sure the folks who trade a lot of single stock vol are in the SIBO food chain. They tend to be outside the SIBO food chain and upstairs on Wall Street. But Facebook could be interesting. So it's in the to your point, Mark, yes, we could do it ourselves. But the first iteration was the one that captured the SIBO quotes, and future iterations, we will potentially be building it ourselves by averaging some strikes. It's not a hard methodology, and it's fairly commonly used. So, it's in the docks for yet to be.
I'm glad someone is actually putting those SIBO metrics to work. I had this exact same conversation with them a few weeks back at Boca. I mean, they clearly are not. They're kind of disseminating these very theoretically interesting names, and not names, but they're disseminating these very theoretically interesting metrics like skew and single stock vol and all these different things, single name VIX. Yet they're doing very little with them aside from dispensing some numbers either end of day or throughout the day, depending on the product you're looking at. And I had this exact same conversation with them. When are we going to have something off of these? These people are interested in these. People like the Apple VIX. People like the skew index. What can we do with these? Even though the skew index, a little bit wonky because the way they disseminate it, 100 to 150 or whatever it is kind of counterintuitive. But there are some interesting theoretical underpinnings there that they should explore. And for whatever reason, I think they've had their plate full with a lot of things, like the SEC really investigating them pretty hardcore over the past year to kind of pull them away from new product development in this space. But yeah, I would love to see. I had this, like I said, the same conversation with them just a few weeks ago. I keep bugging them on this point. Like, when are we going to see something from these single name VIX products and single name VIX metrics that you've been discussing and disseminating for quite a while here? Speaking of VIX and volatility and just individual name risk. I know if you live in the Chicago area, and Andrew, you probably remember it, there was some big news coming out of this area today. That is, of course, Caribou Coffee pulling out of Chicago, a Chicago institution. And now, if you're not from around here, maybe you're not familiar with Caribou, but I'm sure a lot of traders today are going to be a little jittery hearing that news. Caribou selling off a little bit on the news, I think, during the session. I didn't see where they actually closed, but interesting stuff.
I thought they got bought out. Didn't they just got bought out by some big wealthy family in Europe, buying up some coffee companies? They bought Pete's. I don't know. I could have sworn that is in the back of my mind somewhere. But
I'm not up on the latest caribou machinations behind the scenes. I'll have to pull it up and see. I just did see that headline, and it struck me as interesting. I know a lot of our local listeners probably stop at a caribou quite a bit throughout the day, so it might be interesting to them. But speaking of things that interest our listeners, Alex, you touched on it at the top of the show. I think it's a good time to get into it now. We talked about the minis quite a bit, obviously, but the jumbo / I guess you can call it maxi, of course, maxi, an unfortunate term for these new contracts. Why don't you go ahead and give our listeners a quick update on what you're talking about, and then we'll get into some of the ifs and whens of if these things will actually materialize anytime soon.
Yeah, thanks, Mark. So the Boston Options Exchange, one of the smaller players, but innovative. I mean, in this industry, if you're going to be a smaller player, you really need a product niche, and Boston kind of earned their reputation on price improvement. But Boston has filed with the SEC for a jumbo spider. So essentially, instead of having 100 multiplier, it would have 1,000 multiplier, which doesn't take a lot of ciphering to realize that's competition to the SPX. You'd have a similar size product. And we talked about this a little bit last week with Citadel joining the Supreme Court, or filing a brief with the Supreme Court about trying to what I'll call demonopolize SPX trading. The jumbo spider would do that. And the SEC had put it out for comment, and the comment period was supposed to end about now, but they got enough comments that they've extended the comment period out to May. Essentially, what they're trying to do here, in my view, is create a more widely traded competitive product to the SPX, which only trades on one exchange and is expensive for firms to trade. And I know anytime you bring up expensive to trade, everybody says, well, isn't that really bundled into trading costs? And yeah, some of it gets bundled there. You look at the institutional community, which now pays more to trade than the retail community. And the institutional community is where a lot of the SPX and where the VIX is done. And if the markets were equivalent in this, there'd be big demand for it and big traction. And it's interesting because if you read the filings, the exchanges that seem to be complaining the most about it are making the case that it would confuse investors. Those are the same exchanges who, when they filed for minis, said wouldn't confuse investors. It'll clearly be identified and it'll be a benefit to investors. So it's kind of interesting to watch people on both sides of the argument, but we have a working group up here. In fact, they're meeting right now, listening to some of the folks from the box talk about the potential for the Spider Maxi. And it would be nice to see competitive trading in that size product.
Now, what would be the exchange fee on the Spider Maxi, Alex? Did they say yet?
I don't think they've filed fees yet, but the box's core model is not maker-taker, it's taker-maker, and that would change the playing field. The key to all of these, though, fees are important. I'm not diminishing the importance of fees, but liquidity would be key, and I think if the box gets its filing past the SEC, you will see it not only trade on the box, but it would potentially trade on all the exchanges to trade competitively. And then I imagine the fees would be similar, and there might even be rebating.
It's interesting you mentioned the other exchanges, because obviously the notion of a max SPY, or whatever you want to call it, a jumbo SPY contract, has been floating around for a while. ISE has taken repeated tilts at that windmill with absolutely no success. That's why I didn't really pay much attention when I saw Box kind of jumping into that fray as well. I said, well, ISE has already been down that road several times, been slapped down in court each time. I didn't really see this concept coming out of Box having much of a chance for any more success than any of the other ones I've seen, yet somehow they appear to have found a loophole or something that allows their potential contract to perhaps maybe make it through the SEC, whereas the ISE one was slapped down almost instantaneously. You remember ISE did almost the exact same thing about a year ago, and with very less than stellar results, shall we say.
There are two topics that remain mired in legal red tape and politics in the industry, and they are the jumbo and the cash settled. And I know I've gone off on Tusaw-esque rants on cash settled, but they're mired in the politics of the exchanges and the environment we're in right now, where volatility is low and investors have skewed their portfolios for high dividend paying stocks. There are no option premiums. So, we talk about ma and pa investor and not wanting to sell something, 4% out of the money for 18 cents and then have them lose their Ford or their Procter & Gamble and then have all the transactions costs tied up to losing it and then possibly replacing it in the portfolio or losing it for the X state. And cash settled would change a lot of that. And that's been kicking around for a long time, and it just can't get past the OCC board because of exchange politics. And some of that exchange politics is, well, if you can have cash settled equities, why can't you have a cash settled spider? And there's the SPX, and now the exchange knives come out.
It's interesting you mentioned the exchange knives, and we tend not to get into all the inside baseball stuff on this show on too regular of a basis because it can get somewhat esoteric at times. But this is a good example of how this type of inside baseball stuff does trickle back down to the active retail options trader and how it could impact them. These are products that, quite frankly, should have been listed a long time ago and really, I think, would be a benefit to the entire industry. You don't have to look very far back to see what the ISE did when they first got this ball rolling with the SPY options a few years back. They did this. They went through this exact same song and dance. SIBO tried to shut them down, said it was infringing on their SPX license and patent, lost that suit. ISE listed the the SPY options, took off every exchange, listed them, and as a result, the entire rising tide lifted every boat out there, and S&P, SPX volume, everything increased as a result. And I know SIBO has this very myopic look at their own fees and how they can really protect this business for their own interests and for their own shareholders, and I certainly understand that. But I think at the end of the day, if this were to go through, this would really trickle back into the SPX and would generate a lot more volume and a lot more business for the industry as a whole. And I think this would be a definite home run. So hopefully this final incarnation that Box has come up with is the one that's going to pass muster at the SEC and get some approval, and we'll finally get some competition in that SPX realm that people have been looking at for a long time. So interesting stuff there, Alex. Thanks for bringing that back up to our attention.
Yeah, liquidity begets liquidity. The more good, deep liquid products, the cheaper it gets for everyone to trade. One component of trading is commissions, and those are fairly transparent, but the other component of trading is friction. What's the bid offer spread? How much do I get dinged to get out? And if we could bring friction down, it would benefit everybody. But, we'll fight about it again in 6 months or a year.
I'm sure this will be the big topic of conversation coming up at the Options Industry Conference in a few weeks, and I will be out there in force, the Options Insider crew, up in Vegas to record a bunch of great radio programs for you, the listeners, to really get a feel for that conference and what's going on in the business and this kind of stuff like this. We, of course, will have all of the panel audio exclusively here on the Options Insider Radio Network. So if this kind of stuff interests you, you want to see what some of these decisions are going on behind the scenes that really can impact your trading account, then this is the place to stay tuned in a couple of weeks as we start putting out all of that great content for you. But now it's time to keep on rolling along into our next segment, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it is time yet again for the Odd Block, the portion of the show where we break down the intriguing, somewhat obscure, somewhat perhaps dubious trades that are lighting up our collective tapes. Today, we're going to kick things off with a name we don't really see much in the Odd Block, not an Odd Block regular by any means. This is EPI. I'm talking about Wisdom Tree India earnings. It's a great name. All kinds. It's like they put it into Google Translate and they came up with the name of their company. All those words really don't go together very well, but say Levy.
I think it's an index. It's an index.
Wisdom Tree India earnings. Anyway, this is the name. Not exactly lighting up the tape from an options volume perspective, doing about 1,000 contracts a day. Today, just blowing the doors off, doing 17,000 contracts. Pretty much all of that, 15,073 of that coming in one massive call trade. We saw the July 19s really just lighting it up, 15,073 times on splits for 25 and 30 cents. So I don't know how the ratio worked out, but that works out somewhere in the middle, perhaps 27.5 cents if they did it on even splits. Splits, of course, being how you interact and get prices in between the actual listed prices, listeners, when you want to trade at some other price, at a prearranged price. So we saw a lot of these going up on splits. Open interest being pretty insubstantial, only about 480 contracts. So clearly this is all opening paper, and certainly an interesting one, and a bit of a confusing one at first too. Wasn't that the case, Andrew?
It was, because I couldn't quite see when they bought them if they actually were lifting the offer or not. So that was kind of the tough one on that, because the splits were kind of close to the offer, but the weird thing was the IV at the time was down in this strike. So I mean, who would put this trade up? Clearly, somebody had a lot of calls to go. I mean, if you own a bajillion shares of the of EPI, whatever this index is, yeah, you can sell them. But I thought it was very surprising there was no real registration in a register and volatility. So I was a little bit, that was surprising action for me. So I have to say it's an odd blocker because I was confused.
Yeah, usually you don't get those two things in the same trade. You don't get a trade going up near the offer and also the vol being crushed on that strike. It doesn't really make much sense. And we seem to have seen a little bit of a revisionist history on that towards the end of the day. Maybe the print went up late. I don't know what it is. Sometimes these things are crazy. I'm looking at the IV now here on this strike, and it seems to have gapped up a bit. Yesterday it was trading about 19, today at about 20. So a little bit of an increase. Looks like that was indeed a buy after all. It was kind of where when you lift in offers and the strike goes down, unless they have the best execution team on the planet and they're selling near the offer, in which case, hey, I tip my hat to them. And perhaps I need to route some of my business.
They should advertise.
Yeah, exactly. That was their advertisement right there. Hey, we're going to do this trade. It's going to go up on the odd block, and everyone's going to know us. So, yeah, interesting trade going up in EPI. Usually that's what we look at to really try to determine the intent behind these trades, what's going on in implied vol, what's going on with the bid-ask spread. When the two of them are telling you somewhat polar opposite things, it kind of makes you scratch your head, which is why this one qualifies as an odd blocker today. I haven't even looked at the chart here to see if this is a wise buy. Looking here, pulling it up right now. This name was just trading.
Actually, it doesn't look too bad, to be honest. I think I don't know what's going on with all the Asian stocks have been kind of hit lately. You know, this is subcontinent, but you know, some of the Chinese big indexes. So it feels like they're trying to kind of scoop and get a bid going. But in 2010, this thing traded 28.69. So, I mean, I know India has been down quite a bit from some of the highs, but it could be a savvy purchase.
Yeah, just recently in January, it was trading over in the 20 handle, like 2040 around there. So this guy, yeah, he's got some time to go. He's got a few months. He's got some room on the upside here to run. Perhaps this is a savvy purchase after all. We'll see. We'll check back by July expiration, see if this guy closes this one out. Or perhaps he is selling them after all, and it was a great sell on his part, in which case we're completely wrong. So we'll see. Either way, interesting stuff.
Yeah, I guess he just wrote them. I don't know if I want to sell those naked.
Yeah, that's a naked sell on that. I'm less enthused. If he got a good scoop, I'm a little bit more enthusiastic on that one. Speaking of enthusiastic, we're going to keep on rolling here. Next up, we have good old LUFK. Lufkin Industries. Ticker symbol LUFK. They closed today at $87.96. gapping up hard on the day today, of course, up about 38% or $24 on the day. This is the name, not surprisingly, does about 500 contracts a day and lighten up the tape, doing nearly 13,000 contracts today. And surprise, surprise, the thing's up 37%, 38%, and there's some upside trading. Who would have thought it?
I think GE's buying these guys out. The thing that I thought always was interesting is that the May and the June calls were trading for around the same price. Now, they were trading 20 to 25 cents this morning. Now they're trading a dime. So clearly somebody got in and sold some of this, maybe thinking that there will be no rival bidder to GE. I thought because the paper looked like buying this morning, like another bid could step in. And, of course, this being the odd block, I figure, well, if you have May and June trading for the same price, you probably want to buy the June. So that's what I thought there was interesting on this buyout. But clearly the market a little surprised because the stock's up $24. No open interest at all.
Typically you want that extra month if you can get it for the same price, all things considered. That's usually the wise trade.
Actually, considering what's happened with Dell, I don't know. With all this free money sloshing around, you got investment bankers that are a little excited. Oh, GE's going to buy it. Let's, put one over on them. I don't know. They didn't look like, I guess the original thought this morning was they didn't look like a bad shot. So that's kind of what we got, for that. So interesting trade.
Not a ton of money. Not a ton of money being burned on that flyer. Could have been a nice winner if it did. I mean, they were pretty close. They got within a couple of handles of the 90 strike, so they were close. And they still have some time. Who knows? The deal still has to be worked out. But yeah, they were pretty close. They picked 85. They might be a happier camper right now than the 90 strike. That just shows how capricious these things could be, listeners. Speaking of capricious, when I think capricious, I think nothing other than Microsoft. I don't know about you, Andrew. This is the most capricious stock I've ever seen. It moves hither and yon, absolutely willy-nilly, completely unpredictable. No, actually, they're the opposite. Microsoft being about the most predictable name on the planet for most of the past decade. And what we saw today was a neat little package going up. Buy right, but really it was a buy and buy. He's hedging his puts, picking up a bunch of the a little bit farther out Jan 2014, 25 puts for 93 and 94 cents on some splits there, 7,500 times each for a whopping total of 15,000 contracts on that strike. So a lot of downside action coming in from Microsoft. Of course, this is a little homework problem for our listeners. When you buy puts and buy stock, what are you actually doing, I guess, is the question for our listeners. Everyone should write in with their answer. But unfortunately, we don't have time to wait for the mail to come in next week. Andrew will have to give it to you right now. So mute your podcast player right now, listeners, if you don't want to hear the answer. You want to work it out for yourself.
All right. Yes, but you will be buying calls, some sort of synthetic call or some sort of straddle or something.
Say it ain't
the
so.
Grand price
Never.
of 23 volatility, 22 volatility in January 2014, which I think is probably the 1 or 2 year low for 1 year fall. Pretty cheap.
And that's saying something for Microsoft, which is not exactly a high vol name of late. It certainly has been in the doldrums from a vol perspective for quite a long time. A little bit of a pop over the last few months, but other than that, pretty much a low vol name. So if you're scooping the low in Microsoft vol, that's pretty good.
Yeah, I'm looking at it. I'm like, it doesn't look like a bad trade. They want to buy stock. They want to collect the divvy. They want some protection. That is certainly a way to do it in a market that has turned out to be, well, the stock market, as fickle as it is. Of course, Mr. Tusaw would always love buying some puts with your big chunk of stock. I don't know if he loves Microsoft very much, but so again, that's I think a smarter way to play it. And the thing is, the vol's so cheap, you could actually ratio these. I would do like 2 puts to the 1 stock and just let time kind of finish the rest.
Looks like someone
did do
maybe
3 to 2.
Speaking of a ratio, looks like someone did do a ratio on the Jan 30 puts. Look up a couple strikes. 7,500 of those went up.
Yeah, I saw those, and I couldn't make that ratio work for any kind of real trade. Like, why the credits are all goofy? Why would you do that trade?
I agree with you. The numbers are kind of off, but also on the pure option contract volume, 7,500, 15,000, it seems to fit from a 1x2 perspective in that sense. But maybe using those to finance.
Does.
Again, the mysteries of the odd block, listeners.
Right. Yeah. Well, you could have bought the quarters. When I saw the original prices, the quarters, you would have been buying the puts and then selling the, I guess you could have bought the quarter puts and then selling the 30 puts. I guess that's possible. But as it goes up as buy right, I don't see how that goes up as a buy right. So I was, again, a little confusing. I think it's possible they could have rolled a chunk of paper from another month. So like there's some big trades going up in July. It could have been a roll as well. So I had to go with the buy right paper as I saw it. Now those puts are actually lower. They are lower now than when they traded. I mean, we're looking at 93, 94 cents. Microsoft did not have a huge range, and they're already crushing them. So, hopefully they bought some stock down there. That's all I can say.
Yeah, I hope they got a nice dip on the stock as well to go with it.
All right. Hey, you know what? The Goodyear trade is pretty interesting, just from a pure earnings. I don't know if we have like 2 more seconds, but listeners might like this.
We do. I was going to close this up with the Goodyear trade. What Andrew is referring to is, of course, Goodyear Tire and Rubber, ticker symbol GT, closing today at $12.43, up about 2%. A name that usually does about 4,000 contracts today, doing over 10x that, 45,000 contracts, including a boatload here in these May 13s, going up for, I don't know, a wee bit of size. Would you concur there, Andrew?
It's a wee bit for this stock. Let's see. What's the average contracts? Is 4,000 per day. By the end of today, Mark, 26,000 of these things went up on the May 13th.
Crazy.
I wrote this halfway through the day. 14,000 contracts. It is crazy. I would say that's crazy volume. Absolutely. And to me, it looked like pretty much a large bullish bet. There was no open interest. Maybe picking up the fact that the automakers are doing well. Don't quite know, but volatility was up 11 points from 35 to 46. I mean, huge moves in a stock that maybe has a $1.5 range for earnings. So all very, very surprising, I would say.
Yes, we have earnings on the 25th, so this could potentially be an earnings play, getting some earnings juice certainly in these options that he's buying. Looking here on the chain and on the chart here for Goodyear, you're right, hasn't exactly been too much of a range, but it has danced to the upside quite a bit. Traded as high as 14.25 coming out of the last earnings cycle back in February. So this guy's obviously betting no stock going up with this or anything like that. This is like a pure opening buy, no open interest, only 700 contracts to speak of. So a lot of opening paper. Looks like straight up opening upside buy, which we see quite a bit here in the odd block, and this guy looking to get some juice here going into earnings. We shall wish him well and keep an eye on this one as well, I think, as earnings come up on the 25th for Goodyear Tire and Rubber. Someone really laying it on the line, putting down some rubber on the road there, to mix my metaphors quite a bit. All right.
You mix them well.
Thank you. Well, that is my business, sir. I am he of the mixed metaphor. All right. That is going to do it for the odd block, and we're rolling along, so we have to keep on going into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, this is indeed the portion of the show where the Viceroy takes the reins and gives us a bit of an update, a bit of a rundown on what is going on over there in the realm known as Options Express. Of course, we hit on the jumbos earlier in the show, but of course, the flip side of that is the minis. How are all things mini going these days at Options Express, Alex?
So I spoke to the desk earlier. In fact, I have a comment from Grigas on Groupon he wanted me to share with you, but we'll do that in a moment. And, actually, he said he's still in it, and he keeps overwriting it, but there's no juice in it except at earnings, and he's obviously reluctant to write it at earnings, but he's still holding. But to minis, they're doing okay. And I've had a couple of people email me and say, when I say okay, they interpret that to mean that they're not doing well, but that's not what I'm saying. They're doing okay. In fact, Amazon, which has been one of the disappointments in the minis, actually had some volume today. Apple and Spider have been where most of the interest has been, and we're still talking about it. The challenge is the food chain that we talk to and the exchanges talk to tend not to be the ideal user for the Mini. We're talking to the option-centric person. So one of the things we're talking about, especially given that Schwab is now our parent, is how to get these more exposure in that traditional equity non-option user, which is clearly the target. But they're doing okay. I mean, I don't know what the exchanges had as targets for them, but you're starting to see activity in, the strikes bracketing the at the money. You're starting to see activity in the first leap. Generally, where you see most of the trading in options is front month at the money. Generally, you also see activity in that first leap. And they're doing okay. They're not setting the world on fire. And I know I'm going to get another email after this saying, that I'm not enthusiastic about them, but that's not the case. I've traded the Mini myself. I'm short 15 of the apples. But I think people are still figuring out the issue of, is it better to trade the regular? What are the commissions? At this point, I don't think anybody on the street has cut a new commissions book for Minis. And I think that's part of why people are just putting a toe in the water at this point. But they're doing okay.
Yeah, I think it clearly still is very much a shakedown process. We have some listener mail on this topic. We won't have a chance to get to them today. We'll get to them next show, perhaps. But a lot of people still learning, asking questions about these. People still being somewhat surprised at the size of the spreads they're encountering when they're going out there. Still being a little bit confused about the commissions, particularly how they relate minis versus regular size contracts and how that stuff works. I think even finding the minis on new platforms like the OX or like the Live Vol takes a little bit of doing. So there's a lot of shakedown that still has to occur out there. And I'm not surprised to hear that Apple is still leading the charge with SPY. They were very much pitched last year when they were first being bandied about as a mini Apple product. So that's not surprising that that's where a lot of the love and the focus has materialized, but I expect this will spread as we start shaking this out. People get their pricing structures in order. People with the spread start coming in. The market makers start figuring out how to trade these and hedge them effectively and how best to incorporate them into their existing books with Apple and other names like this. And so there's a lot of interesting stuff that has to be happened. This is still very much early days for this product, but an interesting one and certainly interesting to see, and we'll have to keep checking in with you, Alex, to see how that process goes, because if any firm can do it, it's Schwab in terms of really evangelizing these products to the people that, you're right, really should be the target audience for these, the very much the limited options user or the non-options user. This is a great way to start cutting their teeth with this product. And I know Schwab has a lot of those users floating around in their ecosystem. Perhaps they should send you around on a roadshow, Alex, to sing the praises of minis. You and Randy Frederick can do a nice little song and dance.
Yeah, Randy's a better dresser than I am, so I don't know that would make a great roadshow.
It's funny you should mention that. Inside baseball story, but I did a panel with him a few months back here in Chicago, and he showed up in this bright purple blazer. I ended up saying to him afterwards, I was like, what is that? And he said, I just wanted to wear something a little bit different today. And I said, well, you accomplished that, sir. So yes, he can show up at one of his panels and see what he's wearing, perhaps motley at his next public appearance. But a snazzy dresser, to say the least. Thank you for that, Alex. And unfortunately, that's all the time we have for the Express Block. Now we have to keep on rolling with our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we tell you what we're watching, what we're keeping our eyes out for this rest of this week. As I mentioned at the top of the show, it is indeed Alcoa earnings day, and so far it seems like a whole lot of nothing coming out of Alcoa. If the number is indeed out, the stock has pretty much barely shrugged off about 6 cents in the after hour. So the people who are pricing in about 10 to 20 cents worth of juice in that straddle seem to have it about right. So there you go. An altogether unexciting kickoff to earnings season. I'm sure we'll have more interesting developments unfold as the week goes on. Speaking of the week going on, Andrew, what are you watching out for the rest of this week?
Again, watching skew, volatility, how some of these names start to react. If this is the start of the new, the bestest and largest Bernanke put ever. Just nobody was worried about the market going down because the Fed's going to buy $800 billion worth of stuff every year. And I still think that between that and the Bank of Japan last week is causing some distortion. I don't know if the market has figured out how to deal with it yet. So that's what I'm looking at, looking at treasuries, looking at volatility, and just seeing how all that plays out. So we have some positions on. We kind of swapped out of some stuff into new stuff today, just in a small way. But and we'll see how all of this bond buying takes hold, what it actually happens to our markets with it. So I'm not quite sure what it'll be, but we're just kind of trading it as the vol goes in and the vol goes out. So,
Alex, same question to you, sir. Aside from the jumbos and the minis, what else is catching your eye for the rest of this week?
I like the strength we're seeing near the close because that, to me, is money coming out of Asia. The Japanese 10-year is trading at a 0.5% yield. Last week it got, had a 20% move, had a 10-year move in a week. I think you're going to see money coming out of Asia into this market, and you'll see that in the big macro names. You'll see it in the dividend names. The United States continues to be the place for money to go. I mean, there's just no yields. The things that still make me cautious is our 10-year coming down hard off the 2 yield back into the 170s, and we've talked about this a lot, that if that yield comes down, it looks like we'll slow, or it's the precursor to our slowing. And then there's still a couple things, Korea, Syria, Cyprus is gone, but there are macro events out there, and have to see how those end up playing out.
Thank you for that, Alex. And unfortunately, listeners, if you're wondering why Uncle Mike has been so silent for the rest of the show, he had to leave us early, a little client development coming up that he had to hop off for, so he won't be able to join us for Around the Block. But we can then wrap up the show and keep him in our minds for the next show when he'll come on and I'm sure do an epic rant about something equally important to the annuities that we talked about pretty famously a few weeks ago. But unfortunately, that is all the time we have for the option block today. And before we go, one more time, checking in with my all-star panel regulars to see what's coming up for them in their respective necks of the woods. Kicking it off with you, Mr. Andrew. What is coming up in the land of the lobster, aka optionpit.com?
April 20th, 2 weeks. We have that VIX seminar. Please sign up. You get if you sign up for Option Gold class, I believe Mark will throw that VIX seminar in. Go to optionpit.com/events. And that is the SIBO event with Russell Rhodes. So it's a great way to learn about the VIX.
Well said, sir. And if Uncle Mike were here, I'm sure he would tell you to check out their webinar train for this week. You can surf on over to, I believe it's RCMAM, and find out more about that. And last but certainly not least, Alex, what is coming up in the land of OX? Any interesting webinars or events you want to highlight for our listeners?
2 timely webinars tomorrow, 11 a.m. Chicago time. Dan Gramza, courtesy of the CME, is going to talk about where he sees futures for the next 90 days. And then at 1 p.m., Peter Lusk is going to trek all the way over from the SIBO, and he's going to bring the SIBO perspective on minis. All our webinars, all our events are free. Just come to optionsexpress.com, click on the education tab. You can see the full event schedule, and you don't have to have an account to participate in the events. The week after, I'll have some dates up for Idea Hub. We're going to get those up after tax time. The other thing folks should keep in mind is 7 days left to fund or open an IRA, with that ugly reminder that April 15th is 1 week away. Not a pleasant reminder for any of us.
Yeah, I know I still have a number of things to close out on that score, so thank you for reminding me for that, Alex. But since we are talking about things that are upcoming, and Andrew was mentioning some events, I do, of course, want to encourage all of you out there in our listening audience to keep in mind if you're going to be in Chicago on May 15th, and I want to see you down at the CBOE for our upcoming premiere first ever Unusual Activity Forum. We got a lot of great speakers. I'll be there. Mr. Seabass will be there from Option Pit. We'll have Dan from the Market Taker guys. We'll have Stefan, co-founder of LiveVol, will be there. Good guy to listen to. We'll have a bunch of great speakers really coming on to talk and dive into Henry Schwartz from Trade Alert, the man who knows more about options volume and market data than just about anybody else I've ever met. So a lot of great speakers to really sit down and walk us through how we do what we just did on the Unusual Activity segment, the Odd Block, how we find and profile and highlight and analyze and then trade from unusual activity. So if you like what we do in the Odd Block, you like how we kick around and bandy about some of that, we're going to go overboard with that stuff. A whole day's worth of content, 2 panel sessions, plus a floor tour and a bunch of other crazy freebies. I think you're getting Mark's book. You're getting a free month of Option Pit Live. You're getting a free month from Dan and the guys over at Market Taker of their one-on-one coaching. You're getting a free month from everybody, even a free month of LiveVol Pro, so you can kick around and try that out. So a lot of great stuff. Surf on over to theoptionsinsider.com/events to learn more about that and register for that event. If you're going to be in Chicago, we'd love to see you down at the CBOE. And that is going to do it for us here on the Option Block All-Star Panel. And of course, all of us here want to thank all of you in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.